And as we do each and every Wednesday, folks, at 9:40 Eastern Time, we're going to jump over to our man Teddy Kekstadt and check out Teddy's outstanding Tiger Forex Report, folks. You can sign up for $97 a month. He's got new issues every week. You get a webinar in there as well. It comes with a 30-day money-back guarantee, and if you're looking for some good education as well, you get some time over the holidays. 2 great webinars, Capitalizing on Time with Calendar Stock Option Spreads and Japanese Candlestick Pattern Stock and Option Strategies. You sign up for those both, folks. Either one, they're on your members page forever. You watch them as many times as you like. Teddy Kekstadt, Merry Christmas. Ho, ho, ho.
Merry Christmas to all you guys.
Thanks so much, man. Thanks for everything you do. Your outstanding report coming on this program. And so we got, a pretty tame market today, Teddy. Looks like everybody's ready, including myself, for Christmas holiday, the markets. But for the listeners, the viewers out there, what are you seeing in this market as we come into 2026?
Well, I'm pretty happy with the action we've had this week. I figured that the dollar would sink a little bit lower. We spiked a little bit lower today. Now it's stabilizing. I wouldn't expect to see very much today or into Friday, at all. I think you're probably not going to really see very much over the next week or so. Probably not until, probably a week and a half from now when we have our first full trading week of the year. So there's no real reason to see anything really go. We have a nice swing trade in the U.S. dollar yen. But the reality is markets are going to be thin. It's the end of the year, end of the quarter, with the holiday in between, the middle of the week and stuff. So I just really don't think you're going to see any real true movement. It's gambling. If you're going to be trading these markets, I'm just telling you, you're gambling. So you're doing it wrong. You just got to be very careful and just have really rational expectations, because volume is going to dry up very quickly. So is the spreads, no matter what you're trading, getting in and out of any trade. So I'd be very, very careful about how that's going to move, especially today, because you are going into the holiday close. If you're going to trade any more this week, I would say end within the next hour or two, and then definitely don't start again until Friday at the very least. And then I would even be careful on Friday if you're going to trade that session, because it's a Friday in between holidays also. So
no, great advice. I couldn't agree with it more in terms of so often in trading, the discipline of patience or not feeling that need, right, to have a little action, like we all know, as it goes, and like they're talking about in the den right now, low volume holiday trades are often a flip of the coin, and I couldn't agree more. And I think for anybody with a little bit of history experience, that things it's very tough to peg when you got so few market participants. And realistically, man, It's Christmas Eve at 10 o'clock in the morning. We're all ready to get out of here. Market's closed at 1. But,
and the rest of the world's already shut down.
I want to ask you about the VIX, because you got 2 great webinars available under the services tab. You talk about options in there a little bit, so I know you understand the VIX very well. And jump into the market in general. We've had quite a volatility squash a bit, where we got the VIX down at a 13 handle now. What do you think about that in general right now? Pretty low volatility, indicative of a market at all-time highs, but pretty remarkable. I know you love options, man. Talk to me a little bit about the VIX, if you could.
I think that a lot of that, what you're seeing there, has to do with the fact that, you're at the end of the year with the holiday markets. There's really no reason for volatility to jump right now over the next week or so. So I think that's really why you're seeing the drop in the VIX. I bet you see a rise in the VIX come January, especially towards like the third, fourth week in January as we head into February. I'm expecting some very good volatility after we get into the first couple of weeks of the year. So we have a lot of, look at the markets on its highs. We have a lot of markets on their extremes. I think you are going to have some nice currency swings once we get past the first of the year. Odds are you're going to see the dollar index continue to drop. You'll probably see the U.S. dollar yen trade really start to swing around. Right now you have a little profit-taking rally in crude, but I'm pretty sure that if it may not happen by the first of the year, but within the next couple of weeks, I think crude is going to make a lower move low. If that happens and the dollar index, gets hammered too, you can see some big swings in the U.S. dollar yen trade. So for sure. So there'll be some action. I think if you got a trade to start looking at, going into the first of the year next week, especially come a week from Friday, or even positioning into the new year, I would say the U.S. dollar yen might be one to take a look at, especially if you have where it looks like crude and interest and the dollar is signaling a trend in one direction where you can play off that currency cross.
We got a question in the den Teddy,
Sure.
about just possible January effects. Now, equities are one thing. You got tax selling, right? We have all this stuff. But in general, do you notice something over the long haul in terms of impacts on terms of currencies, whether you're looking at December, January in general, or is it just, I know they trade with a lot of momentum, currencies in particular, but is there any type of effect as you come in January that you look for in general on like a time basis, historical basis?
Sure. Okay. Well, not in the sense like you would have like with the equities markets. You don't have those kinds of moves, but definitely in January. So you got to realize that the central banking cycle is reset. So now we have the platform. We know when the Fed meets next. We know that they just cut rates. You have, especially since you have a divergence in central banks. Like when you have them all on par, you kind of have set the trend for these major markets over the next couple of quarters. This time we're heading into where we have the central banks around the world are looking to raise rates while we're looking to still cut rates. So I think that divergence that you have there should have a shakeup in the bond market. You'll probably see it in the shorter term rates moving into the 10-year probably in the first couple of weeks of January. So I would look for interest rate swings for those spreads to start to move. And as those spreads start to move and the yield curve starts to move, then I think you'll start to see a good trend in yields, which then would be indicative of setting off a trend for the currencies, especially the dollar index, especially if we have an easing on yields, which I think we probably will see that moving into January and February. That should put pressure on the on the dollar index. So we'll see what happens with that. Anything can obviously happen, but I really believe that that's probably the reaction you're going to see, as far as those markets are concerned. You'll probably see a lift in gold. The levels that gold is at, I think it's way, way, way overvalued. But the reality is the trend is your friend, and that's the way it's going right now, at least right now. So I'd be careful of those. Look for some volatile swings in the metals markets probably come January and February. I think you're going to really start to see some action there.
Great analysis, man. I appreciate it. I know, pretty wild, right? $4,500, platinum to the moon, silver. We just hit $72, and I agree with a lot of what you're saying. That the pressure is going to be on rates. Pressure might be on the dollar. And boy, if pressure's on the dollar to go lower, and we already have gold at $4,500, what does that say, right? Well, the market momentum, yes. Man. Momentum in metals. It's like every day I wake up, folks, and I see the headline. I joked Teddy yesterday, all-time high. Say that yesterday's story? No, that's today's story again, man. We're doing it again.
Right.
Well, Teddy, Thank you so much for the time, man, for all the great work you do on your newsletter here on the program. I really appreciate it, man. You have a great Christmas, a great holiday, and I look forward to talking to you after Christmas, Teddy. Really appreciate it, man.
Sounds good. You guys all take care and have a safe, happy Christmas, too.
You too. Safe holiday, great holiday. Thanks again. Folks, check it out, the Tiger Forex Report. And like I said, you got some time over the holidays, you want to check out some of the great webinars, check out those webinars under the Services tab. All right, folks, markets. S&P's up by 2. NASDAQ slightly in the red. Dow up 112. We're coming back, folks. One more segment. Don't go away.